Hi, everyone, and welcome back to another episode of Mind in Motion. I'm Alina, and today I'm joined by someone I've admired for quite a while in the world of behavioral finance, the thoughtful and always insightful Daniel. Daniel, it's great to have you here.
Thank you, Elena. I'm excited for this one. Emotional decision making in trading, that's one of those topics that sounds technical at first, but it's deeply human.
Exactly. And that's why I wanted you here, because today's conversation goes into something that shocks a lot of people when they first hear it. More than 90% of traders lose money. 90%. And what's even more shocking is why. We're not talking about lack of indicators or fancy chart patterns. We're talking about emotions, fear, greed, frustration, euphoria, human stuff.
Right. Whenever I mention that statistic, people assume it's exaggerated, but it isn't. It's been repeated across multiple studies. The average trader doesn't lose because they don't know how to buy or sell. They lose because they can't manage themselves.
And that's the part I find so fascinating, because if trading were just buy low, sell high, everyone would be rich. Everyone understands that. But in reality, the moment money and uncertainty and pressure come into the picture, it's like your brain suddenly rewires itself.
Absolutely. Think about it. Trading combines three things humans historically struggle with: uncertainty, fast decisions, and risk. That's basically an emotional minefield.
Before we dive deeper, I want to ask something more personal. Do you remember your first experience with emotional chaos while trading?
Oh, vividly. I was young, maybe early 20s. I had a small account, just a few $100s. I entered a trade, saw it go slightly negative, panicked, closed it, then watched it move exactly in the direction I predicted. I felt stupid, angry, embarrassed. The next day, I tried to make up for it, placed a bigger position with zero analysis, driven purely by frustration. And of course, that one blew up. That was the moment I understood. The market wasn't my enemy. My mind was.
That's the classic revenge trading loop. And I feel like anyone who has ever traded has lived something similar. Even people who don't trade professionally understand that pattern. You make a mistake, you get emotional, you act impulsively, and suddenly you're far from logic.
Exactly. And what's interesting is that trading amplifies everything. Your fears, your hopes, your insecurities, your pride. It brings your subconscious to the surface.
Which leads to one of the main ideas in today's discussion: emotions distort perception, and they do it fast.
Very fast. Let's consider some examples. Confirmation bias. You enter a trade and only look for information that says you're right. Fear of losing. You close winning trades too early to protect profits. Greed. You hold losing trades because you hope they'll come back. Euphoria. You win a few times and suddenly believe you're invincible. Frustration or revenge trading. You lose and impulsively try to recover. These emotional distortions are natural, but in trading, they're deadly.
Because the market doesn't reward impulses, it rewards control.
Exactly.
And that connects perfectly with something powerful in the research. Losing hurts more than winning feels good.
Yes, that's loss aversion, one of the most studied psychological patterns. And in trading, it creates two behaviors that ruin accounts: holding losing positions too long and closing winning positions too early. Even when people have a profitable system, they sabotage it emotionally.
It's almost like the brain is trying to protect itself from emotional pain, even if that protection destroys the account.
Exactly.
And the document also talks about something that honestly blew my mind: the idea that 95% of our actions come from the subconscious.
Yes. What that means is that most trading decisions, especially under pressure, aren't rational. They come from emotional programming, past experiences, beliefs, and fears. That's why so many traders keep repeating the same mistakes, even after switching strategies. They think they're solving the problem, but they're only changing the surface. The real issue is inside.
And that experiment mentioned, where traders were given a profitable system but still failed, is such a clear picture of that.
Absolutely. And it proves the point. The trader's biggest enemy is not the market. It's their own untrained mind.
And that brings us to the ocean metaphor, which I personally love. Markets behave like the ocean. Waves, storms, calm periods, currents. The sailor to navigate, but can't control the ocean.
Exactly. A good sailor
That is
doesn't
what I am
yell at the
talking
waves.
about.
They
We
prepare,
did it!
stay disciplined, and adjust. But many traders try to control the
Sell
market.
it now. Get
and
out while
that's
you still
when they
can.
collapse.
We're dropping fast,
Emotional
and I need
traders
50,000
want
shares at
excitement,
par.
adrenaline, fast wins. But the traders who survive, they're like navigators. Patient, strategic, calm.
And emotions become the wind. They can move you
Madre
forward
mía, lo hemos
or
perdido
sink
todo.
you.
Yes, and that's why understanding emotional traps is crucial. Overconfidence after a winning streak, fear before entering, impatience that pushes early entries, denial when a trade goes bad, FOMO that forces late entries. These emotions pull traders away from rational decisions.
And I love that these aren't trading issues. They're human issues. Trading just magnifies them.
Exactly. Trading gives immediate feedback. You see the consequences of your emotions instantly and in money.
So let's shift into solutions. The idea of an emotional trading plan is brilliant.
Yes. Traders normally write technical rules, but forget to write emotional rules. But emotional rules protect you more than technical ones. For example, if I feel anxious, I pause. If I feel euphoric, I stop trading for the day. If I lose more than X, I close the platform. It's emotional structure.
And then comes risk management, risking only 1 to 2% per trade.
That alone reduces emotional pressure enormously. High risk creates fear. Low risk creates clarity. When your risk is small, your mind stays calm.
Then the emotional journal. I think this is one of the most powerful tools.
Definitely. You write how you felt before, during, and after trades. Over time, patterns emerge. You discover what triggers you. Awareness is the foundation of control.
And then mindfulness, breathing, meditation. People underestimate it, but high-performance individuals rely on it.
Yes, meditation builds mental discipline. It reduces impulsivity. It strengthens focus. The strongest traders train their minds like athletes train their bodies.
Now let's move into something deeper, mindset transformation. How does a trader truly avoid being part of the 90%?
It starts with acceptance. Accepting that the market owes you nothing. Accepting that losses are normal. Accepting that consistency matters more than intensity. Then, emotional neutrality. You should only trade when you're emotionally calm. Follow your rules, review your emotions weekly, reduce risk, think long term.
In other words, self-mastery.
Yes, trading is not a battle with the market. It's a battle with yourself.
Hearing this makes me realize something. Trading is like a mirror. It reflects your real you, unfiltered.
And once you learn to manage that person, you grow not just as a trader, but as a human being.
Before we wrap up, let's give listeners a few concrete tips they can apply right away.
First, lower your risk. Second, create emotional roles. Third, keep a journal. Fifth, step away when emotional. Sixth, think statistically, not about one trade, but about the long term.
And here's my favorite one. Don't trade to feel something. Trade when you feel nothing, neutral, steady, grounded.
Perfectly said.
Daniel, thank you for this powerful conversation. I always enjoy how you bring humanity into financial topics.
Thank you, Elena. It was a pleasure.
And thanks to everyone listening. Remember, the biggest challenges in trading aren't on the charts, they're within you. Until next time, take care of your mind, stay self-aware, and keep your emotional compass steady. Goodbye.